Hey, this is Mike Durr, the Kingwood Mortgage Guy, and we are talking about our homebuyer Webby. It is Tuesday, November 15th, and we are doing an Are You Financially Ready to Buy a Home webinar tonight. We're doing it for a specific reason because we think that it's a good idea for you to know what the questions are and what you are kind of putting yourself out there for to get ready to buy a home. And we want that to be something that you feel comfortable about. All right, I am the Kingwood Mortgage Guy. My phone number is 281-348-9899. I have just gone through my continuing education for 2017, and that means that I should have an NMLS number that's active and ready to go. I always like to just mention that I've been very fortunate to have positive reviews on my website, and if you look up Kingwood Mortgage Guy, a lot of times you'll see those. But anyway, love to chat with you. I love this Kingwood area. Don't confirm is that I am licensed in the state of Texas. I do loans all over the state of Texas. As a matter of fact, we've got one going in San Antonio right now. We have two going in San Antonio right now. We do them in Dallas, we do them in Austin, we do them in Houston, obviously all over the place. But I still call myself the Kingwood Mortgage Guy. I guess I could be the Texas Mortgage. All right, so what we're going to be talking about tonight is, let's see if I can make it happen, dreaming of owning. I got a quirky thing going on here, so forgive me for that. But maybe you've been thinking about owning a home, owning your own home. Maybe it's more like dreaming, and but for some of you, it's like a driving force. You're going to do this. You just need to plot out the path to get there. And if you don't know that exact path, it's a good idea sometimes to get somebody to help you with that. Somebody that understands all the little nuances. And that could be a great realtor. It also could be a good mortgage guy, or a mortgage person, I should say. So that's what this is about, and we want you to feel like you're in the right place, particularly if you're getting closer to that time when you're ready to buy. A lot of times this comes to you because your rent just went up again, and you're tired of throwing rent money down the drain. So we don't want you to do that either. One thing, you're not sure what you can afford. This is a big issue for a lot of people that are renting, is they know there are specific ratios. They know that there are certain criteria that you have to meet. You just don't know what it is. So how do you know if you're ready? Well, the checklist included here is going to help you. And that's what we're going to do, is we're going to go through this checklist. Number one, are you debt-free and with a healthy emergency fund? This kind of comes right out of my Dave Ramsey training. And I will let you know right now, I'm a big Dave Ramsey fan, and think that the system that he's got to help you get out of debt, manage your money, is a very good one that you will be blessed with, is probably the best way I can say it. And note, at Second Baptist Church, they are having a financial peace registration going on right now for people to register and start. I think it starts January the 15th of 2017. And if you want to participate in the Financial Peace University that is put on by Dave Ramsey, it's being hosted by Second Baptist Church, but it's put on by Dave Ramsey, I would totally encourage you to call me so that I can send you out a registration form. Or, and I think that'd be a great idea. But number one, are you debt-free with a healthy emergency fund? And that would be a great way to go, because this ensures you can handle any of the unexpected expenses. Next question is your income stable? So what we're talking about is, do you have a consistent flow of income on a month-to-month basis? Because if you don't, you could have troubles making your monthly obligations. Have you checked the health of your industry that you work in? Well, the way things are going these days, you might need to check that from time to time, just to be sure that what you're going to be doing, or what you plan to be doing, is consistent with what's going on out there. And so there are some industries that are sensitive to that, not a lot. Medical industry is really good. Who knows? Mortgage industry may not be. And we'll see. But you have to have some kind of consistency there. Have you met with a mortgage professional and disclose your financials? this is always a good idea. It's probably the first thing that you should do, just so you can get a feel for what's going to be needed, and then you can start getting your hands on those things so that you can be prepared. Always a good idea. Number 2, have you determined how much down you will invest? According to Dave Ramsey, the best down payment is 100%. So wouldn't it be sweet if you could pay for a house with cash? Yes, my friends, it would be. Not many of us can do that, though. 20% is one of the criteria that lenders like, and borrowers like it too, because it eliminates the need for private mortgage insurance. And private mortgage insurance is, in essence, I think it's a really good thing that allow people to buy houses with less than 20% down, because if we all had to put 20% down on a house, there wouldn't be many people that could be homeowners. However, if you the mortgage insurance is really just protecting the investor or the mortgage company, and so you don't want to do that very long. So you want to get out of that as fast as you can. So 10% is still very good, but there are programs out there where you can put limited down, sometimes 0, 3%, 3.5%, and 5%. All of a sudden, the ability to buy a house because you've got a little bit of money saved, and for some people that might be a lot of money, but it's there. I mean, we do loans with minimum down all the time, and it seems like the people work things out. The payments aren't that much higher, especially with interest rates as low as they have been. So it's definitely a good thing. Would it be better if you can put 20% down? Yeah, it would. No, absolutely, no doubt about it. When considering how much you will put down, plan on paying closing costs. So some sellers cover closing costs to sweeten the deal, but you can't bank on it in this particular time. Average closing costs can vary anywhere from 2 to 5% based on whatever the home purchase price. It wouldn't be 2% on a $300,000 property, and it's probably not going to be 5% on a $100,000 property. But it does base itself on the loan amount, because the closing costs they're not always directly related to the amount that you're borrowing. To put that in perspective, on a $200,000 home that is between $4,000 and $10,000, that could include the lender fees, the title company fees, the tax and insurance escrow, which is always a big one that you have to consider. Okay, so we mentioned loan costs. Let's talk about them some more. Here are some of the things that are included in that. You have an origination fee, and the origination fees these days are really the lender fees. Could be paying for the underwriter, could be paying for processing, could pay for the closing documents being prepared by the attorneys. It could be also home and pest inspections. Could be the appraisal, prepaid property taxes and insurance, recording fees, underwriting fees, title company fees, the one I didn't mention on there, but you're definitely going to have to pay those. And if you don't pay them, the seller is going to pay them. And there is an opportunity for you early on to negotiate that, and just make sure that your realtor who's going to be doing the negotiations knows that you want to do that. So that could be a good thing. And then the next one is loan cost. Loan cost, you won't know how much to put aside for closing costs until you receive a loan estimate from your lender. This mortgage estimate can be a really helpful thing if it's accurate. So you're supposed to receive a final disclosure at least 3 days prior to the close of your loan. But I'll tell you that there are not many of them that are exact, but they're pretty darn close. You always want to review it carefully with your loan professional and make sure you understand everything. And that's a big deal. You want to make sure that you understand what all the costs are. Don't forget about moving expenses. Well, guess what? After you get moved in, everybody's happy. You go, okay, now we got to pack things up, and we got to rent 3 guys with a college degree or whatever. I don't know. Whether you're paying a moving crew thousands to move and pack you up, belonging to you, or you provide pizza for the best friends you're going to have moving expenses. So boxes, bubble wrap, and other moving supplies. The best thing you can do is plan for this. And there are some people out there that do this for you. They are very detailed. They will box things up for you. They'll label the boxes for you. And it just makes the whole process a lot easier if it's done with a little discipline. And are people that just jump in the car, ask for somebody to help them out, buy them pizza and beer, and you get in there, and the next 3 months you're just trying to wade through boxes. Most of the time, appliances are not included in your home purchase, at least some appliances, particularly a refrigerator. It's rare when it is. You will need to have deposits and cleaning supplies and paint and all that kind of stuff. So anyway, it can be something that you want to think of. It's not the main thing, but it's definitely a thing that you want to consider. There we go. This is a summary. Are you financially ready? Well, while you wait for your closing date, get estimates of what some of these costs will be. Pad the amount you calculate to make sure you're going to have enough money. Don't let home excitement cause you to overspend. It's real easy to go buy furniture or buy lawn equipment or buy stuff that you know you're going to need when, in fact, you are also having to put down payment and you're paying closing costs and you got taxes and insurance escrows and all that kind of stuff. So just be a little bit cautious. Start slow. It's okay to have less or old furniture. We've all done it. Number 4, work with an experienced buyer's agent because the seller pays the commission and the buyer's agent can save you thousands by knowing all the little subtleties, the rules and red tape that has to happen. Make sure you get into the right home and just, we'll do a good job of taking care of you. I am the Kingwood Mortgage Guy. I put this on a weekly basis. I try to answer particularly new home buyers, first-time home buyers questions. I always encourage you to call me at 281-348-9899. And if you don't, you can email me at mikekmg@gmail.com. And I would love to chat with you. I'd like to be helpful to you guys. And again, would be here to serve you. So other than that, I appreciate you. I'll talk to you soon. Bye-bye.